Okay, let's unpack this. Imagine you've just got a bit of extra cash, right? Maybe a bonus, or you finally saved up a little. And then that question hits you. Okay, what do I do with this? How do I make it grow without feeling totally lost? Hmm. It's a really common feeling, I think, for anyone just starting to think about investing. So today we're going to dive deep into two super popular options, especially somewhere like Thailand. Mutual funds and gold. You hear these names thrown around a lot, but figuring out which one is actually right for you, that can seem, well, tricky.
Yeah, and what's really interesting here is for absolute beginners, getting your head around the practical differences is just so important. It's not about just picking one because it sounds good. It's about making a choice that really fits your goals. So our mission today really is to simplify this. Cut through the jargon. You don't need any investment background to follow along. We're basically putting these two investment heavyweights side by side, give you a clear comparison so you start thinking about which path feels better for your own financial situation.
Okay, sounds good. Let's roll up our sleeves then. Mutual funds first. When I hear that term mutual fund, it still sounds a little complex, maybe a bit intimidating for a first timer. So, what's the quick explanation? What are they really, and how do they actually work for someone, totally new to this?
That's a fair point. The name does sound a bit formal, doesn't it?
Yeah.
But really, think of a mutual fund like a big investment club, but professionally run. You put your money in along with lots of other people. So you're pooling your resources. And all that money gets handed over to a professional fund manager. This is someone whose full-time job is, well, managing investments, watching the markets. They take that big pool of money and invest it in a whole mix of things, maybe stocks, shares in companies, or bonds, which are like loans, or real estate, other assets too. And the real advantage, especially if you're starting out, is you don't have to do the hard work of picking individual stocks yourself. You don't need to be glued to a screen all day. The pros handle that day-to-day stuff for you.
Ah, okay.
Yeah.
That immediately takes away some of the pressure, right? And what really jumps out at me there, thinking about beginners, is that diversification piece you mentioned. Spreading the money out, that's not just jargon, is it? It's like not putting all your eggs in one basket.
Exactly. It's fundamental.
So if one investment doesn't do well, it doesn't sink your whole pot. That feels safer.
Mm.
Plus, you get that professional management. And you said you can start small.
Yeah, that's a big one.
Like, how small are we talking?
Often just a few thousand or your local equivalent. You don't need a huge amount to get started.
Right, so it's accessible. That removes a huge barrier for a lot of people.
Absolutely. That instant diversification and having an expert manage it, huge pluses when you're learning. But, we have to be balanced here. It's important to see the other side too.
Yeah.
Returns are not guaranteed.
Yeah.
That's investing 101, really. The value can go down as well as up. There's always some risk, and there are fees involved. You pay for that management at the fund's operations. Those fees vary. And maybe most importantly, this takes time. It's not a get-rich-quick thing. For example, say you invest in a Thai stock fund. You're probably looking at like 5 years or more before you see really significant results. It's definitely a long game. A marathon, not a sprint.
Okay, so mutual funds. Modern, diversified, managed, but requires patience. Now, what about the other option? Something with like deep history, something people have valued for, well, ages. Let's switch gears to gold. That's our second contender. An asset trusted globally for a very, very long time. It has that kind of timeless appeal, doesn't it?
It really does.
Ah,
Gold has this enduring quality. And if you want to invest in gold today, you've got a few ways to go about it. The classic way, of course, is buying physical gold. Gold bars may be gold jewelry. You actually hold the asset.
right, something tangible.
Exactly. But there are more modern routes too. You could invest in a gold fund, which works a bit like the mutual funds we just talked about, but it focuses just on gold or gold-related stuff.
Yeah.
Or if you're comfortable with tech, there's online gold trading,
Right.
buying and selling digital forms of gold. So different options depending on what you prefer: convenience, storage, direct ownership, that sort of thing.
So if you choose gold, what are the real benefits for you, the investor? Why do people turn to it? I always hear that term safe haven. What does that actually mean in practice?
Yeah, safe haven is the common term, and it holds water, mostly. Gold has some really compelling points. First, it's often seen as a shield against inflation. When prices for everything are going up, the value of your cash can kind of erode. But gold often holds its value better. It's seen as a hedge. Its value doesn't just vanish, it's physical, tangible. And here's the key thing about crises. When things get scary: economic trouble, political instability, general fear, people often flock to gold.
Right.
That demand pushes the price up, often when other things like stocks might be falling. So it acts like an anchor, We've definitely seen examples, say, in years when the Thai baht weakens or the economy feels shaky, gold prices tend to climb. It proves its worth as that store of value.
Okay, so it's a protector, a safe haven. But you also mentioned its price can be quite volatile in the short term.
Hmm.
That sounds a bit like a contradiction for a beginner. How can it be safe and volatile? How should you think about that?
That's a really important distinction, actually. And it's not quite a contradiction if you think about time frames. Gold's price can swing quite a bit day to day or week to week. That's the short-term volatility. It reacts to news, currency moves, market whispers.
Okay, so daily ups and downs.
Exactly. But the safe haven part, that usually plays out over the longer term or specifically during major crises. When the whole financial system seems wobbly or inflation is really running high, gold tends to hold its purchasing power or even increase it. It protects your capital then.
I see. So short-term bumps, long-term stability in storms.
Kind of, yeah.
Mm.
But it might be a bumpy ride getting there sometimes. And another really key difference from, say, stocks or bonds. Gold doesn't pay you anything regularly. No interest, no dividends. Your profit only comes when you sell it for more than you paid. So you really have to time your sale or just hold it for preservation, not for income.
Okay, this is great. We've looked at mutual funds, we've looked at gold, got a feel for both. But now for the main event, maybe. For you listening, the decision often comes down to putting them head to head. So let's do that. A friendly showdown. How do mutual funds and gold compare on the things that really matter when you're just starting out?
All right, showdown time, let's break it down. 5 key areas. First, ease of use. Honestly, both are pretty easy for beginners. Mutual funds are simple because the manager does the work. You invest, they handle it. Hands off. Gold, especially physical gold, is often just buy it and hold it. Pretty straightforward. Even the funds or online trading are generally user-friendly these days.
Okay, so both get points for simplicity.
Next up, starting capital. Again, good news for beginners here. Both let you start relatively small. Mutual funds, like we said, often just a few thousand baht or equivalent. With gold, you can also start small. You could buy tiny amounts, like those 0.6-gram gold bars you sometimes see. Or you could use something called dollar cost averaging, especially with a gold fund.
Dollar cost averaging. What's that, quickly?
It just means investing a small, fixed amount regularly, like every month. Doesn't matter if the price is high or low that month. Over time, it averages out your purchase price, makes it less scary than trying to time the market.
Got it. So, accessible starting points for both.
Third, return. This is where they often differ quite a bit.
Sure.
Mutual funds, especially stock funds, generally have the potential for higher growth over the long run. They aim to beat inflation significantly, build your wealth.
Right, aiming for growth.
Gold, on the other hand, is more about preservation. It's your anchor in a storm. Its growth isn't usually as explosive as stocks over decades, but it protects what you have when other things fall.
Growth versus protection.
Okay. Fourth, risk. With mutual funds, the risk really depends on what the fund invests in. A fund buying risky tech stocks.
Right.
Higher risk, higher potential reward. A fund buying stable government bonds. Lower risk, likely lower return. You choose your risk level.
Makes sense.
Gold, as we discussed, has that short-term price volatility. It can jump around. But paradoxically, it's still seen as that safe haven because it tends to hold value or even rise when everything else is collapsing. It's a different kind of risk profile. Sometimes it moves opposite to stocks.
Okay, different types of risk to consider.
And finally, fifth, liquidity. Basically, how quickly can you get your money back if you need it? Selling mutual fund units usually takes, say, 1 or 2 business days to get the cash back in your account. Pretty quick.
Okay.
Physical gold bars, though. Often you can walk into a gold shop, sell them, and walk out with cash almost instantly. That's incredibly liquid in many places.
Wow, yeah. Big difference there for quick access. That side-by-side is super helpful, breaks it down really clearly.
Yeah.
So, we get to the big question then. After hearing all this, you, listening, might just be thinking, okay, what should I actually choose? I'm a beginner. Where do I start? It's still a bit daunting, maybe. How do you make that call?
Well, yeah, it really, really boils down to thinking about your own goals first. What are you investing for? If you're starting out and your main aim is long-term growth, like you want to build wealth slowly over years, maybe for retirement, maybe a house deposit, then generally a mutual fund is probably a better fit. You get the growth potential, the diversification, the management.
Okay, focus on growth, lean towards mutual funds.
Right. But if your main goal is more about safety, about preserving the money you have, protecting it against risks, inflation, big economic shocks, essentially keeping your savings stable, then gold often makes more sense. It's that historical safe harbor, that store of value.
Focus on safety, lean towards gold. But here's a thought, and maybe this is really practical for someone totally new. Do you have to choose just one? Or could you, do both?
That's a really smart approach, especially for beginners. You absolutely don't have to pick just one. A blended strategy is very common, splitting your money.
Now,
So, for example, you could put, say, 70% of your investment money into a mutual fund for that growth potential, and then put the other 30% into gold as your safety net, your hedge against things going wrong.
like 70-30.
Exactly. Or some other split that feels right for you. It gives you a taste of both, potential growth plus that bit of protection.
That actually sounds like a really sensible way to start. You get exposure to both ideas without going all in on one.
Precisely. And that brings us back to the core idea, really. You look at the bigger picture. Neither mutual funds nor gold is, objectively better or worse. The best choice is always the one that fits you. Your goals, your timeline, how long are you investing for? And, crucially, how much risk are you actually comfortable taking? Understanding yourself first is the most important step, before you even decide between gold or funds or anything else.
So thinking about all that, what feels like a better fit for you right now? Is it the growth potential of a mutual fund? The stability of gold? Or maybe that clever combination, that 70-30 split or something similar, to get a bit of both worlds? What really stands out to you as you think about starting your own investment journey? Something to mull over?